morning, good evening, good afternoon, students and traders all around the world. This is FXFreedom broadcasting you live on YouTube. And this is the foundation course, Forex Course 101. Remember everybody, trading is a learnable skill when we learn in the correct way the three pillars, right? What are the three pillars of this foundation course, everybody? Pillar 1 is the market. We're trying to learn about the market with the basic module, beginner module, intermediate module. We are in the Fibonacci's right now. Pillar number 2 is the strategy. We are going to learn about the strategy in the advanced module, and the big one, pillar number 3, is the trader, right? The mindset. We're going to learn about the trader occasionally, in the last lessons of the Forex Course 101, but talking about the trader more in the Forex Course 202. What do champion beginner traders always say? Champion beginner traders always say that I am not going to live and die on a trade by trade basis. I'm not going to be happy just because one winner. And I'm not going to be frustrated just because one loser. I'm not going to live and die on a trade by trade basis. And you can follow us on YouTube, everybody. The channel is called Professional Forex Traders Academy by FX Passion. Instagram, still the old nickname, right? Real FX Passion. And Facebook too, the old nickname FX Passion Trading. Remember, these streams are not trading or investment advice. These streams are for educational purposes only. And remember, 90% of traders lose money in the Forex market worldwide, right? Australia, Japan, Canada, Brazil, Russia, Ukraine, Stockholm, Germany, Italy. Did I mention USA? Alaska? 90% of traders lose money in the Forex market worldwide. And lastly, remember, if your way is not working, why don't you try ours? Right, everybody? And today is our last day before we go on vacation. Everybody, if you did the homework as I've asked you to do, this is the correct Fibonacci sequence. Remember, I left you yesterday with the homework. Find your original Fibonacci on on NZD USD daily chart. Okay, everybody? So this is the Fibonacci that you should have found. So capital A is at 0.72181. This is our A, and our B is down in here at, let me see the number, 0.65289, I believe. Okay, everybody, now those are, this is the A, this is the B. Okay, so this is the Fibonacci sequence on NZD USD daily chart. So talking about the Fibonacci, don't mix apples with bananas. Fibonacci is telling us that we should what? Short the market, trying to short the market. Of course, the market moves in waves. It's up and down, extension, retracement, extension. But we are here, right? So should we start to, or should we look to sell the market, short the market? There is no right or wrong. This is about the Fibonacci. Or should we buy to go long? Should we look to go long? Talking about, everybody, don't mix apples and bananas. We're talking about the original Fibonacci direction. A, B, C, D, A, B, C, D. Make sense? Yes, this does not mean that you cannot win if you go against the Fibonacci, because we've learned about the market wave. We've learned about the extension, retracement, extension, retracement, extension, retracement, extension. But it doesn't change the fact that once, second time, two times, for the third time, the Fibonacci sequence. The market is following the Fibonacci sequence. Can you see it, everybody? Type in the chat, yes, I can see it, or no, I can't see it. Can you see, everybody, that on NZD/USD daily chart, this is the third time that the market is following the Fibonacci sequence? Deep rally, deep extend, yes, deep retracement extension, deep retracement extension, deep retracement extension. Type in the chat, everybody, yes, I can see it, or no, I can't see it. Patrick says yes. Very good, excellent. Okay, so today we are going to talk about AUD CAD, everybody. AUD, so here those are the class AUD CAD, right? Everybody, let's open, everybody, AUD CAD monthly chart, AUD CAD. Okay, let's open out GBP JPY, out CHF JPY, out GBP, out NZD CAD. So we're going to leave it because of the rules. Out Euro Dollar, out Euro JPY, we have the rules. And clone chart, everybody, AUD CAD monthly chart, number one. And settings, preferences chart, it must be GMT. Okay, all good, GMT, fair enough, right? GMT, this would be the upper band, this would be the lower band, right? This is our not Euro Dollar, AUD CAD. There you go, everybody, AUD CAD, right? AUD CAD, our upper band would be somewhere in here, and clone, our lower band would be somewhere in here. Exactly, we've learned those are not lines to the pip, those are areas. Don't stress out with the number. Oh, is it 0.6298 or is 0.75, whatever. Don't stress out, those are areas. Upper band, lower band, so somewhere in here, right? Okay. And this is the chart so far. Monthly bands, the long-term bias is down from the monthly bands. And everybody, where should we start our A? Should we start with the first circle, AUD CAD monthly chart? Should we start with the second circle, AUD CAD monthly chart, or should we start with the third circle, AUD CAD monthly chart? What do you think? And remember, what you are trying to acquire in here, in this foundation Forex course 101, it's the mindset of the process. Okay? How would a beginner trader approach the process? Then how would the intermediate trader approach the process? Hopefully in October, November, how would an advanced trader approach the process? How would an advanced trader approach the market? And in the Forex course 202, finally, how would the professional trader approach the market? Okay. Patrick says first. Anybody else? Anybody else? Everybody? So The answer is no, everybody. Everything starts from the monthly bands. Make sense? The market went the upper band, hit the lower band, from the lower band went to the upper band, from the upper band went to the lower band, and from the lower band it went back up to the upper band. So everybody, the correct, it's all about education, don't be shy. The correct answer is number 3. Okay, number 3. It all starts from the bands. Okay, the only reason that we are not starting from here, but we are starting from here, is that the market hit the lower band, hit the upper band, hit the lower band, hit the upper band. This is the only reason why we are starting from the third circle. Okay, everybody? Yes, the monthly bands are the strongest, right? Oh, but you said somebody's typing, not on YouTube, but you said the absolute high. It's not just absolute highs, everybody. We clarify to you. In an up or in a downtrend, right? Where is the downtrend? Downtrend, there you go. Downtrend, right? Downtrend. The A is going to be the first high, the absolute high, the highest high, the starting point of a downtrend. Make sense? Make sense? So if you say, well, I'm going to start here and not here, you know, is this a starting point of a downtrend? Remember, you must look in general the whole picture. Make sense, everybody? You can say, well, yes, this is the starting point of the downtrend. Well, yeah, but until down in here, then it's not anymore. Higher high. Okay, but if you start the sequence at the first, you end up at the third. Exactly. Exactly. Okay, everybody, don't complicate too much. You have a rule. You start from the monthly chart. You start from the bands. Okay, very good. Now let's zoom in the chart, right? Which one is our A, everybody? Is the first circle our A? Is the second circle our A? Or is the third circle our A? In the meantime, I'm going to put it on the chart, A and text. This is going to be our B, and text. This is going to be our C, and text A, B, C, D. Which one is our A, everybody? First circle, second circle, third circle. And then we're going to do the weekly chart, and if we have time, we're going to do the daily chart, everybody. Patrick says first, yes sir. So this is our A, and we're going to draw the horizontal lines for the Fibonacci, something like this. And something like this, a little bit smaller, transparency. There you go. This is our A. Which one is our B, everybody? Is the first circle our B, or is the second circle our B? Which one is the B? Topless says first one, yes sir. Loki says the first circle, yes sir, congratulations. What about the B, everybody? Which one is the B? First circle, second circle. And then we're going to find the C, and then we're going to find the D, right? And then we're going to adjust the original Fibonacci, as the title is saying for today. We are going to adjust the original Fibonacci in a downtrend. A goes to C, B goes to D. Patrick says first one, Loki says first one, Congratulations everybody, you are learning. So this is out, this is out, this is the B. We're going to spread the Fibonacci retracement tool from B to A. Of course. Let me, no, I showed you already. So this is our C, right? And the extension red goes to red, right? A to B, B to C, red goes to red. Didn't stop, so down in here the market made a low. Yellow color for the ABCDs, transparency, ABCD, there you go. And now we're going to readjust our Fibonacci. A goes to C, C is out, and horizontal line B goes to D down in here. And you can leave it, the Fibonacci, or you can erase it. Fibonacci retracement tool, again A to B. And we are here, 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 here. Let's compress the chart. We are here, here, here. Everybody. Okay, now which one is the C? Is the first circle the C? Is the second circle the C? Or is the third circle the C, everybody? Freedom, I cannot see. Well, horizontal line on this one. Violet, everybody, which one is the C? The first circle, the... Hello Julius, how are you? Patrick says B first, yes sir. Which one is the C, everybody? First circle, second circle, third circle. Yesterday somebody sent me an email. Dear FX, still the old nickname, right? So, Dear FX Passion, would you be so kind and tell me your Fibonacci on Euro AUD? And I said, absolutely not. You know, this is your job to practice. And if you are wrong, then I'm going to correct. Right? Patrick says the third one. Third one, anybody else? Julius, Loki, Topless. Anybody else? The C, first circle, second circle, third one? Yes, third one, exactly. Third one, very good. This is our C. And one more time. So it hit the blue, right? Hit the blue, not the red. Now what about the D? Right? If blue goes to blue, is the first circle the extension? Is the second circle the extension? Or is the third circle the extension? Julius number 3, Olufemi number 3, yes sir. Oh, everybody, congratulations, all of you are correct. All of you are correct. What about the D? First circle, second circle, third circle. And then I'm going to show you, everybody, a 90% probability trade. Makes sense? Wow, oh my gosh, 90%. Yes, this is our last lesson before we go on vacation. I'm going to show you a 90%. It's still not guaranteed, everybody. Makes sense? A 90% probability trade. But let's finish with the D. And remember, it's all about you understanding. You get the understanding of this, how this market works. Okay? You can find 90% probability trades. I can promise you this. But Fibonacci is an issue. Why? Because if we draw Fibonacci in the wrong direction, the monthly chart is easy because we don't have that much swings, highs and lows, short-term trends. But the daily gets challenging, and the 1 hour chart, 2 hour chart, 4 hour chart gets extremely challenging if you did not practice well. Okay, which one is the D, everybody? First circle, second circle, third circle. Blue goes to blue. Number 3, very good. Yes sir, everybody, blue goes to blue. So one more time, right? The market hit the blue down in here, but there is no low, so this is the low. You know, the market pushed down to the green level, doesn't matter. This is the first low after the projected the extension. So this is our D down in here. Okay, and A goes to C, A goes to C, and B of course goes down to D, down in here. Okay, one more time, Fibonacci retracement tool. Okay, and if you want A to B, B to C, A, B, C, D, one more time, A, B, right? There you go. Third one, Patrick, yes. Now, this is, everybody, you must understand something. This is a live chart, alright? This is a live chart, and this Fibonacci is still valid. Third circle, yes, Olufemi. This Fibonacci is still valid, and we were monitoring this Fibonacci, you know, 1, 2, and remember, the monthly, it's not relevant. This could happen on the 15-minute chart, 1 hour chart, 2 hour chart, 4 hour chart, whatever chart, with the premise that you understand that the higher time frame controls price action and direction on the smaller time frame. Okay, this is the market, you know, and back in time, 1, 2, 3, bam. Okay, this is, or this was, a 90% probability trade. Why? Calm down, breathe, right? Breathe, everybody. You know, some of you get anxious when you see something like this. Oh my gosh, 90%, you know, this is my Lambo. Breathe, okay? So, everybody, this happened for real, okay? Why is this a 90% rate? Okay, so there are, and remember, this is the mindset, this is the how, where we are, okay? Not talking about professional trading, but how an intermediate trader growing up would think. Okay, so why 90%? Why 90%? Why 90% probability trade? Okay, so number one, the signal, okay, is on the monthly chart. We've learned that the monthly chart is the grandfather. Okay, number two, the market retraced, Brazilian guy talking English, the market retraced to the blue level. Number three, we have a trend line break. We have a bearish candlestick formation, and number five, the reversal. Talking about candlestick formation, the reversal, we learned the candlestick formations are reversal points. The reversal happens at past resistance. Everybody, when you take all of this in consideration, then you get out. And remember, there is no 100% rate. The maximum you're going to get, the highest probability to rate, it's, somebody would say 85, still fair. Okay, this is the highest probability to rate that you can ever get. Take a pen and paper and take a screenshot and write this down for your trading. This is a textbook highest probability to rate that I'm going to ever get. Okay, everybody? This is the highest. So, number one, why 90%? Well, number one, for starters, we are on the monthly chart. Okay? And this is pure education. If you would continue to buy up in here, if you would continue to buy on the 1 hour chart, 2 hour chart, 50-minute chart, you would lose. But what's the problem with the advanced students, with the advanced traders? This is a loser that you don't need anymore. Make sense? One of the biggest issues becoming a professional trader is that you are making pips, but you are losing pips too. You know, you have a winner and then you have a loser. Winner, loser, loser, winner, winner, loser, loser, winner, loser. You need to stop losing. Make sense, everybody? And this is the understanding. So the signal is on the monthly. Number two, the market retraced to the blue level. Okay, let's write this down. The deeper the retracement, it goes to all Fibonacci's on all currency pairs, all time frames. The deeper the retracement, the highest the probability of a reversal. So when I say to you, well, it cannot get better than this, well, maybe not true. Maybe, you know, the market can retrace to the red level. Make sense? Or almost hit out the A. Almost took out the A. So the deeper the retracement, the highest the probability of a reversal. Did you write this down, everybody? Talking about the Fibonacci sequence, the deepest the retracement, the biggest the probability of a reversal. And when you understand this and you learn, you say, oh my gosh, it's a deep retracement and it's on the monthly chart. You have a great probability, 90%. So the understanding of number one plus the understanding of the second point plus the understanding of we have a confirmed trendline break plus the understanding that we have number four, bearish candlestick formation on the monthly, and plus that this reversal, it's happening at past resistance, right? Past resistance in here. You have a 90% probability to rate. Okay, 1, 2, 3, there you go. Let's zoom in, right, a little bit. Let's zoom in. 1, 2, 3, there you go. Here is the challenge for this guy. When you see this kind of setups, hear me out before we go on vacation. When you see this kind of setups, you must enter the market. Make sense, everybody? You must trade. There is no hesitation. Oh yes, but you know, I'm not sure if my trend line is correct, and I'm not sure if the Fibonacci is going to work, and I'm not sure about yada yada yada. Okay, you must enter. You have 1 plus 2 plus 3 plus 4 plus 5. Fair enough, fair enough. Somebody's typing on the other streaming platform. Oh, but you can still lose. Yes, you can. Fair enough. It's a 90% rate. You can still lose. Yes, sir. But not 7 times out of 10. 7 times out of 10 the Fibonacci is going to pay out. And you have 1, 2, 3, 4, 5. Double click. You have all these reasons to go short, and you are not shorting the market. In the beginning, you know, basic module, it's okay. You don't have the confidence. You are not sure. You don't have the understanding on how the market works. But after 6-7 months about, oh, this is how the market wave works. Oh, this is how the short-term trend works. Oh, this is how support, resistance, pivot point works. This is how candlestick formations work. This is how trend lines work. See everybody? And you should demo trade and put all of this in practice, 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 and you have a 90% probability trade. And we are here right now, you know? And this is where people call you, oh, you are lucky, you know, or, oh, you know, you must have a crystal ball, or people are calling you, oh, you must be a genius, you know. FX, formerly FX Passion, today FXFreedom, oh, you are a genius. Absolutely not. This is the learnable skill, you know, this is the learnable skill. And when you win money and pips on the demo account first, they're going to ask you, you know, John, how did you know? Well, I have a signal on the monthly chart. The market retraced to the blue Fibonacci level. I saw a trendline break. I saw bearish candlestick formation. And I saw a reversal on the past resistance. This is why I shorted the market. Make sense, everybody? How did you know? It's a skill. Any questions about this? Talking about strategies, right? Any questions about this setup? Any questions about this setup, everybody? And if there are no questions, I am going to ask you a question. Why the market did not fall on the first trendline break? What's the difference? Everybody, this is your $1 million question, and I'm not joking. $1 million, what is he talking about? This is your $1 million question. If you can understand what is the difference in probability about this trade, the first one, that it didn't work quite well, and the second one, believe me, you are in a great shape to earn and make your millions and billions. Everybody, you have two counter trendline breaks. One, the first one didn't, not that it didn't fall, but it didn't work quite well. And the second one it did, right? What's the difference between 1, 2, 3, 4, 5? This is one of the most valuable lessons talking about the Fibonacci's that you are going to ever get. If you understand this, you are going to understand the financial markets game. We are calling this, you know, learn how to think in probabilities. We are talking about this like probabilistic thinking. Nobody wants to be a millionaire? No answers? What's the difference between the first entry and the second entry? What is the difference? On the first one, if you are not skilled enough, you would lose. On the second one, even if you are a bad trader, talking about the skill, you would lose. I mean, you would win anyway. Look at this downfall. In here, you must be a better skilled. You know, you can still enter in and out. But here, you know, it just went down. So this entry didn't work that well. This one, it worked pretty well. What's the difference between the 1, 2, 3, 4, 5? Don't be shy, everybody. We don't bite. Don't be shy. The retracement had not finished. Well, when you trade, you don't know this, right? If you are a normal person, right, you would enter in here. Why not? Make sense? Fibonacci is down. Yes, it is. We have a trendline break. Yes, we do. We are at past resistance. Yes, we are. So why this entry didn't work that, not that it didn't, but it didn't work that well compared to this one? What's the difference in probability on the 1, 2, 3, 4, 5? Come on, everybody, make me happy before I go on vacation. You should have learned this. Not about the Fibonacci's, but not a confirmed trend. No. On the second entry, you don't have a confirmed trend either, Loki. Anybody else? See, and this is the challenge right now. You know, I'm John or Joanne. I'm using the Fibonacci's. I'm going to see something like this, and I'm going to enter, and I'm going to lose on my 2-hour chart, 4-hour chart, daily chart, whatever chart. And when the next happens, I'm going to hesitate because I just lost one, and another signal happens, and I'm going to hesitate. Hear me out, everybody. This is a common challenge, not a mistake. This is a challenge. You are going to enter in here confident that is going to be a winner. You are going to lose one, and then when a 90% probability trade comes along, our brain is not going to understand that it's a 90% probability trade, but is going to perceive this entry as a threat. And up in here, I'm going to start thinking, well, I'm going to wait for another candle. I'm going to wait for the 4-hour chart to show me 2 lower lows, 2 lower highs. I'm going to wait for the daily chart to show me a crown or head and shoulders. I'm going to wait for the weekly MACD or stochastic. I'm going to wait, I'm going to wait, I'm going to wait. Make sense, everybody? The professional trader has no strings attached up in here. It's a 90% probability trade, period, end of story. Make sense? And it's pure execution. All of them retracement about 50% and above a higher probability. Wow, so yes, this is one, everybody. This is the difference. This first was retracing to the, so from the Ducascopy J Forex, this retracement happened to this reversal happened to at the green one, 38.2 retracement. This reversal happened at the blue one. The deeper the retracement, the higher the probability of the reversal. So this is one. Congratulations to you, Olufemi. Patrick, the candlestick pattern at the deeper level. And this is the second one, everybody. Congratulations to you, Patrick, too. Everybody, is this a bearish candlestick formation or not? As Patrick is saying, the first circle you don't have at the entry. When this candle closed on the other side of the uptrend line, this candlestick formation is not bearish. If you don't have this skill, everybody, go back and learn about candlestick formations. Everything else, it's about the same. First entry, the signal is on the monthly chart. Second entry, the same. Number 2 is different. First entry, the market reached the green level. This is the difference. Trendline break, it's about the same. First entry, second entry. Bearish candlestick formation on the first entry, we don't have bearish candlestick formations. On the second one, yes. And the reversal happened at past resistance, it's about the same. You have past resistance with the first entry too. But number 2 and number 4 were different. Clara, double top formation. I'm not seeing it, Clara. After an extension, the market will retrace. Not relevant, Olufemi. The first one, I can see a bullish tweezer bottom, but the bearish body with a little bearish pressure. Yes, sir. Loki, the first did not reach the blue level, exactly. Julius, and after the bull step in with a bullish candlestick formation to push them. Yes, exactly. Okay, everybody. Now, let's go on the weekly. We're going to do exactly the same. Exactly the same. We are going to start, this is out. We are going to start, this is our A. Right, everybody? See how difficult it gets time to time? If you are not sure if your A is this candle or this candle, zoom in the chart. Make sense, everybody? If you are like this, you know, if you zoom out, I would say, oh, those two highs are about the same, right? So we need to zoom in, and we need to zoom in, and if nothing else, you're going to use the widget tool. So the first candle high, it's at 107.169, 107.146. See, high 107.14, high 107.16. So this is our A, out, out. This is our A. Let's see which one is our B, right? And the B is tricky too. Everybody, which one is the B? This time, AUDCAD weekly chart. Which one is the B, everybody? Is the first circle our B? Or is the second circle our B? Or is the third circle our B? Which one is the correct circle? And this would be a beginner's mistake, drawing the Fibonacci. Somebody would blindly do something like this. Oh, this is the A, this is the B. Wrong answer. Which one is the correct B, everybody? First circle is the B, the second circle is the B, or the third circle is the B. Fibonacci is very precise. Patrick says second. Anybody else? So for everybody who says, well, is the second one, question, how do you know that the first one is not? Opa, Loki says first one. Congratulations, Loki. For everybody who is saying not the first one, why not? The B is the first low as soon as possible after the A. Why the first circle would not be our B? Don't be shy, everybody. We don't bite. Participate in the chat. This is how we learn. And we have 5 more minutes before we finish for today, and we are going to be back 1st of August. Of course, if there is no new pandemic all around the world, you know, and I can travel back. Anybody else? Julius, which one? Olufemi, first circle, second circle. Clara, first circle, second circle. And everybody else online? Second, first one, second. Okay, we have mixed answer, everybody. So before you discharge the first one, we are going to zoom in. We are going to zoom in. Everybody. Now, I mean, you can see it already, right? You can see it already, but if you are not sure, one more time, widget. This, what is the low? 105,237 on the left side. So in here it's easy to spot, right, that this is a center candle and 2 candles on the left, but the white one is challenging, right? So I'm moving the mouse on the blue center candle. Low is at 105,237, white one 105,273, 237,273. So the white one, it's a higher low. Okay, Patrick and everybody else. Fibonacci is very precise. This would be, everybody, and this is a habit, makes sense? Don't draw Fibonacci like this. Oh, you know, this is the A, and this is the B, and then this is the C, and the D is, where is the D? And this is the D in here. You're going to have your Fibonacci is wrong. Julius second, no sir. The first one, the first circle is the B. It doesn't look like, fair enough, but it's time for you to zoom in, everybody. Okay, it's time for you to zoom in and use the tool. So this is our A, clone. This is our B, right? Fibonacci retracement tool, B to A. Did the market hit the black level, everybody? Yes or no? Well, it's not really relevant because the market pushed down anyway, right? AB, where is the C? This is our C up in here, and the first low, of course, it's our D. And almost no change. A goes to C, and B goes down to D. There you go. Fibonacci retracement tool, B to A. Peter says my chart looks slightly different. Yes, it could be, everybody. If you are, this is an issue, everybody. If you have different times on the chart, somebody's trading from the GMT chart, somebody's trading from the UTC plus 2, UTC plus 1, then you are going to your charts, fair enough. your charts are going to be slightly different. Okay? But Freedom, why did you not zoom in us for us to see? Answer, this is your job, Julius, not mine. Make sense, everybody? You need to learn how to do. You need to be self-sufficient traders. Okay? Julius, in my blunt English, I'm not going to work for you. Make sense? You need to practice, not me. And as you understand, everybody, sometimes I'm tricking you on purpose. I want to see if you are thinking. But Freedom, why did you not zoom in us for C? On purpose. This is your job. Patrick, I agree with what you're saying, but if I do this on my chart, the second one is the first follow. Patrick, it's okay, makes sense? This is a challenge for everybody. Do what your charts are telling you to do. Okay? Is there a difference between the demo versus live? No. Everybody, there is no difference between demo and live, but there are differences between the time settings that you are having, make sense? And also there are differences between the liquidity providers. If you are using JForex platform, you are going to have one liquidity provider. If you go on TradingView, right? Let me see, let me open TradingView, everybody. You know, you have TradingView up in here. See? And when you put in here Forex and Euro dollar, see everybody in here? Those are FXCM, Oenda, Forex.com, Pepperstone, IDC, Capital.com, Saxo, and so on. Look how many different liquidity providers you have. Talking about not JForex anymore, talking about TradingView. So your issue could be the time zone. Your issue could be the time zone, everybody. If you are going to talk to your friends and you are going to compare the Fibonacci's, the issue could be the time zone. Or if you are on TradingView, the issue could be different liquidity providers. Unfortunately, this is an issue. Okay? So what's the answer? Just follow the rules. Just follow the rules. As Patrick is saying, my chart is showing to me something different, then do what your chart is telling you to do, okay? So what is the right time zone for us to close? We don't know. Everybody has a different time zone. Okay, everybody, let's speed up because we're almost over. A, B, C, D, A, B, C, D, A, B, C, D, A, B, C, D. Our C is going to be the highest high inside the AB boundary. Green goes to green. A, B, C, D. So this is going to be our new A. Need to check if there is a low, no low. So this is our D extension. A, B, C, D, new Fibonacci sequence. This is our C so far, this is our A so far, this is our B so far, right? And our projected extension is somewhere down in here. And there you go. This is our C. And this was our 90% probability to rate from the weekly chart. This was also a good trade, the first one, but one more time, what's the difference? You should be more skilled, you know? On the first entry, the market pushed down, but as soon as it reversed, you should get out of the position and re-enter here one more time. Okay? In conclusion, if you didn't trade on any time frame, counter trendline break, 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 everybody. If you did not trade AUD cat here on any time frame, introspect until we get back and try to find an answer. Why not? And don't tell me, oh, I don't like AUD cat. There is nothing to like. You want to make money. Make sense? Okay, everybody, thank you very much. This is our first lesson, and see you back in August the 1st. Until August the 1st, stay strong and learn. Okay, and trade for freedom. You want to be free?